Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, April the 29th. The year's 2021. Let's talk trading. See versus look for part 4 with Walmal. And part 4, just like parts 1, 2, and 3 videos, is for educational purposes only. Your results may differ from mine and from Walmal. Walmal, you were just telling me where we left off. So, let's
Yeah.
bring the boys and girls and non-binary traders up to speed here. I've got a 1 hour chart with the grids, the sweet
Okay.
spot lines on it.
All right. Let me go over there now. That way I can be looking at the same thing you're looking at. And yesterday where I left it off was, this whole idea that, we run statistics ahead of time. Those are not really indicators. What they are is frequency distributions. And we need to go and know these things. So at least with my method of trading, I need to know those things ahead of time. I need to know that, essentially that, if I'm looking at the pound dollar, that, for instance, at this particular time, this hour right now, we've had 12 pips of movement, and that's in the 38th percentile. I have a lot of things, those things in my mind, in my brain already, and I know that what that is. Like, for instance, I know that today we've only moved about 48 pips for the entire day. And I know that that's a very, very underperforming day in terms of total pips for the day. That tells me there's a good chance this day will go and range out a little bit. Can we have a day that's only 48 pips? Absolutely. It happens. In fact, I'm looking at my smart range right now. It happens 5% of the time. So yeah, it can definitely happen. Not likely, but it can happen. But what more importantly, what that tells me is that this whole idea that the market's got more to move and it's got the potential to move, and I've got a good number behind me. So then I like to go and put the grids up on the screen, and I put the grid up for the pound dollar, every 10 pips. And the reason why I do that is because I know typically in the London and New York session, or at least the first half of the New York session, that we're going to go and average out somewhere between, 19 and 30 something pips. That's just what it is. That means that there's lots of room in there to go and take a trade, because what am I doing? I'm waiting for a line cross. I wait for that line cross to happen, and when that line cross happens, I take it and run it as far as I can. Sometimes it works, sometimes it doesn't, And then I think as you get better with this, I know there's been some chatter out on the Facebook group in particular about, how do you filter out bad trades? Well, first of all, in the beginning, I don't know if you can filter out bad trades because you may not know the particular pair well enough to do it. But that said, over time, you get to know the pair so well that you can see and you just know that, hey, this pair is just, it's coming to it's not expanding like it normally would. You know what? This is probably not a trade to get into, or if I'm in the trade, it's now a trade to get out of. And you just know those things over time as you get used to it. I like to go and look at it this way. When you're driving a car and you're going down, in the U.S., you're going down the interstate highway, okay? And while you're driving down that interstate, generally speaking, you know how fast you're going. You don't even have to look at the speedometer. You know this based on how fast things are going and passing you by, and more importantly, you also know that, hey, maybe, this is a time where I do need to go a little bit faster because people are recklessly passing me. And if I don't go a little bit faster, there's a difference in speed, and I may get hurt that way. Or the other thing is like, yeah, the speed limit here is 65 miles an hour. Well, guess what? I'm not going to do 65 because everybody else is doing 45. That's going to be reckless. Well, I think when we're trading, we can do similar type of things. As we're sitting there, and if we have that grid work there, we can see that, hey, look at the way price is moving. Look at the way it's fluctuating up and down. Look at how fast it's moving in a particular direction. And we'll get an indication as to how things are moving. And that's that price action thing that we talk about all the time. And it's sort of like you get a feel for that. Now, I know other people define price action differently, and that's fine, but that's just not how I define it.
Well, back to we're looking at this chart here, and so for this hour, the short was in hindsight was at 60, but the thing is, we know that ahead of time So
That's
like with
correct.
so what the Walmal trade is, you just take the trade. You were saying people trying to filter out bad trades. Well, the thing is, there's no such thing as a bad trade. There's unprofitable trades. There might be you might have failed to execute your plan. You might have come in entered late, but those are failures on the trader. It's not really there's no bad trade
Right.
because
As long as you go and follow your plan, then
yeah,
it's not a bad trade. It's just it may not wind up in in a category where you actually put money in the bank,
yeah.
and that's just part of trading. We're all going to take wins and we're all going to take losses. What you're trying to do is just obviously try to go and maximize your wins, and not necessarily just the number of W's, but the number of pips that go into the bank.
Yeah, so like for example, so on this trade here, you can see it didn't break out of the previous H1 high. Well, if it's not making higher highs, if it's not making highs, it's reversing off of highs. And what did it do? It reversed. And so you take
Exactly.
the trade. And so if we drill it down to the M1 time frame, we're 9 minutes in. So where is the so here is the open, the first candle of the hour. It had a high of 64.8. Well, it didn't break the previous high, and then it started reversing. And so it was a big move down at the 60. And so if you got in at 60, your stop loss was never threatened, not once. Not
Yeah.
this hour so
Yeah,
far.
that would have been a really nice trade, some really nice, easy trade, and at the same time, people know that I usually wait for the second touch. And on the 1 minute chart, you got the red candle, then you had that green candle come up and it actually touched the line. So my entry probably would have been, I would have waited for that green candle, that second one actually would have been the third candle. I would have waited for that to turn green. So yeah, I would have gotten in late on that trade. I would have, instead of getting in at 60, I would have gotten in, 58.8.
Yeah.
That's a hindsight thing for me.
Yeah, so
Not hindsight,
I was going to say,
experience thing.
you order block traders right here. Here's what I would define as an order block on M1, and you can see price came in it and is reversing out of it. You see
Yeah,
that?
I've
You see it?
Yep. Oh, absolutely. Yeah. And it's and all those things. That's one of the things that you can do is you can sit there and say, is there more reasons to take the trade than not? The problem is you can start to get so cute that the next thing you know, you've put so many things onto the trade that you're not taking any trades. And so one possibility, or and what happens with that, I've seen a lot of traders do this. They do that, and then out of frustration, they just go and take the trade willy-nilly, and they're airballing it,
Yeah.
and then you got a problem, No, the thing is, we know that the pound is going to move during London and half of New York. It's going to move, almost every time 20 pips. Well, if I'm within 3-4 pips of that break of that grid line, and I'm going in that direction, take the chance. Just take the chance. And I know there was a lot of talk about why do you get out early? Well, sometimes what I see a lot of times on the charts that I ran and I'm up 5 pips, and my 10-5-1 says, well, let it go until you get to the 1, and a lot more times than not that does work. But there are times I look at the chart and I say, you know what, I got 5 pips right now. I don't like what price is doing right now. I'm gone. I'm out. One of the things that I do is that, let's say I'm up 5 pips, and price stops. Just literally stops. And we've all been there. It's like, come on, price, move either direction. I don't care. Just give me a direction. Let me know what you're going to do, and it sits there. And I start counting in my head, 1 Mississippi, 2 Mississippi. And next thing you know, I'm 5 Mississippis in, and price still hasn't moved. Well, do you know what I do? I exit the trade. I'll take my 5 pips right then and there. And I know, Tiro, you've caught me doing that a billion times probably. But that's what I do, because more times than not, now what happens is that now there's a 50-50 chance it's going to go in my direction or go in the other direction. You know what? I'd rather not take that 50-50 chance. It's sort of like, I knew this one guy when I was in college, and he was a gambler. I mean, he would literally gamble which direction a fly will fly off a door handle. Well, I don't need that. Put the five pips in the bank. You know what? Wait for the next trade and just go on from life from there. And just move on. I'm halfway done for the day. Not bad if I can get halfway done in the day in 3 or 4 minutes.
Exactly. So what I just did was I was showing the the boys and girls and non-binary traders how to adjust the indicators to match up with the 3-level ZZ. So we set it to 34, and you can see right here price came down. We've got the M1 lowest high here, and then the M1 highest low here. And you can see here price it went up, dipped below the lowest close, so you can see that, and then it came back up, and now we hit this imbalance zone. So what do we see? These indicators are just showing me zones where I can look at this chart and I can see it, but I have to interpret it, because see right here, I know this is an imbalance, I know this is an order block, and I can see here there was an imbalance put in right here, so I know I'm going in a red imbalance. But for those traders who don't have the seat time, the indicators are just helpful. And then for things like the open, the close, the highs and lows and pivots, to me it's just nice to have that an indicator either plotting lines or showing it to me in English so I can see what's going on.
Yeah, and that's so useful and so helpful, because it's the type of thing where we talked yesterday in the beginning of the video. What do? How do you're starting off with a fresh chart with nothing on it. What are you going to do? And I said I draw these lines and I draw those lines and draw them out. Well, the great advantage of having a modern computer, which we have, is that I can go and have this wonderful little indicator go and draw all those lines for me.
Yeah.
Now,
oh, you mentioned computer. Fellow traders out there, there's something you have to understand. I write these indicators. These indicators are for MT4 on computers. So you traders that use phones and tablets, no, you can't use my indicators on your phone and tablets. It doesn't work. And then there was somebody who wanted to know about the 3LZZ. It was giving them alerts, but it doesn't send it to the phone. Well, I guess I'm old school. And to me, if you want to trade, use your computer. That's the right tool. I know there's a lot of phone traders out there, but no, the 3LZZ, the original coder of that indicator, I don't even remember if he put alerts in or if I did it. I think I did it, but it's I don't send alerts to my phone or email. No, if I want to trade, I'm going to be in front of the screen. So it doesn't do that at the moment. And chances of me doing it, I don't know, maybe if I'm in a good mood one day and feel for somebody, but chances are it's just like the same chance of me coding in MT5. Well, maybe not that bad.
Yeah, the thing is, I know a lot of folks do trade off their phones and stuff, and that's fine for them. For me, maybe I'm too old school. I like having a keyboard in front of me. I like having my mouse in my hand. I don't even use the trackpad on the laptop. No, I got an actual mouse that's right there. It just makes it easier for me to go and measure things and see things and give me more confidence into what I'm doing. Yeah, you can go and do it off a phone. Let's face it. In the old days, go back 100 years ago, they didn't have a computer. So how did they do it? They literally stood in a pit, and they had a caller that would call out the prices, literally yell them out across the room. And so you had to go and make your judgment just by hearing a price. So it certainly can be done on a phone. It's just that, why would I go and limit myself when I've got a computer that's in front of me that allows me to do that? Yeah, I guess I can't go and carry it with me and do this mobily, while I'm sitting there watching, the grandkids play soccer or something.
Yeah,
But then again,
I was just going to say, the fastest 15 minutes in trading is up. So I hope that helps, because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.